Okay students, so the next concept which we will discuss is assets and its classifications. Okay, this is one of the most important concept. Assets will always be used in each and in every questions. Okay, in almost every questions you solve, you'll be coming through this term assets. Okay, so let's first understand what is an assets. The valuable things owned by the business are known as assets. Okay, these are the properties owned by the business. Simple. What is an asset? Properties owned by the business. Now let's see the classification of assets. Okay, classification of assets. Now basically there are three types of classifications. Okay, but maximum you will see is two types, but the other one, the third classification, is also very important. Okay, we have to understand that's a bit logical one. Okay, so let's start with the first type of assets, fixed assets. Okay, now what is the definition of fixed assets? Assets which cannot be converted into cash immediately are called fixed assets. Okay, let's take an example. Land and building, plant and machinery, furniture, motor vehicle, etc. Okay, so fixed assets, I hope you all know what is a fixed assets, right? Fixed assets are those assets which cannot be converted into cash immediately, are called as fixed assets. Example are land and building, plant and machinery, furniture, motor vehicle, etc. Okay, now in other words, fixed assets are those assets which are acquired for long-term use in the business. These assets are not meant for resale. Okay, so when we talk about fixed assets, right, say for example we are in manufacturing. Okay, we are manufacturing an article, okay, or any product. So plant and machinery will be very important, right, to manufacture the product which we are dealing. Okay, now you want to manufacture a product, but you will need a factory, right? Land and building, you need furniture for the administrative and office work, and you need motor vehicle to transport your goods from your factory or your outlet, from your factory to your outlet or to the main market. Okay, so fixed assets are those assets which are required for long-term use in the business. These assets are not meant for resale. Okay, these assets are not meant for resale. What do I mean by resale? These assets are not meant for buying and selling. Okay, but that doesn't mean that you cannot sell these assets or you cannot buy these assets. Okay, if the asset is obsolete, or if you think that your assets is quite a bit older, or you have to replace with the new assets, you can obviously sell this type of assets. Okay, now the second classification is current assets. Okay, now the second classification is current assets. Current assets. Now what's the definition of current assets? Assets which can be easily converted into cash are known as current assets. Okay, which can easily be converted into cash are known as current assets. Now, what are the examples of current assets? Stock, bills receivable, debtors, etc. Okay, now these are the current assets which can be easily converted into cash. That's why we call it current asset. I told you the definition of current, right? Current simply means from which we can receive money within 12 months. Okay, now stock. See, you have a stock, you have manufactured article or a thing, and you have stock for this. Now this stock will not be kept with you in your warehouse forever, right? You will sell this in the market. What was bills receivable? Bills receivable simply means money which we have to receive from the debtors, right? And debtor simply means the person to whom we have sold goods on credit, right? Now there are other cash and current assets. Okay, so for example, like cash in hand and cash at bank. Okay, do this thing need to be converted into cash? No, because this is already cash in hand. You have cash in your pocket, in your hand right now, and cash at bank. This money you have in your bank account. Okay, so this is current assets. Now the third classification is fictitious assets. Okay, the third classification is fictitious assets. Now what do we mean by fictitious assets? Sorry, let's write the definition. Fictitious assets are those assets which do not have physical form. They do not have any real value. Actually, they are not the real assets, but they are called assets on legal and technical ground. Okay, so let's try to understand this with an example. Okay, what are the examples? Preliminary expenses. Preliminary expenses, preliminary expenses, right? This word it looks like a very heavy word, right? But it's very simple. Preliminary expenses. Second is advertisement expenses, and third one is loss on issue of shares. Okay, now write the last, if you want you can write the last point. Fictitious assets do not have real value, so they are written off in the future. Okay, I hope you have solved the financial statement questions, right? Wherein you will see in your balance sheet, there will be preliminary expenses here. This is your asset side, preliminary expenses. Okay, now what is this preliminary expenses? We have to understand. Okay, preliminary expenses. So let's try to do a detailed discussion on this part. Okay, preliminary expenses. Now what is fictitious assets? Fictitious assets are those assets which do not have physical form. They do not have any real value. Okay, they do not have any real value. Actually, they are not real assets, but they are called assets on legal and technical ground. Okay, now let's try to forget about definition. Okay, you don't have to do anything with the definition. No one will ask you the definition of fictitious assets. You just have to know what is a fictitious assets. Okay, so let's understand with this preliminary example, preliminary expenses. Now what happens in case of companies? Okay, in case of companies, now what is a company? I hope you know what is a company, right? Now company is a type of is one of legal entity, is a legal entity like other businesses. Okay, so there are different type of businesses like sole proprietorship, right? there is partnership firm. Here in sole proprietorship, what happens? Only a single person runs the business. In partnership firm, 2 or more than 2 partners run the business. Now there is another type of entity which is called as company. Okay, now company is of different types: private limited company, public limited company. Okay, and there are other companies, 1-person company. There are different types of companies. Okay, but as of now, you just have to understand what is a company. Okay, let's take about public limited company. You don't have to know the difference between private limited and public limited as of now. Okay, you will learn that when you solve questions when you learn the concepts in class 12. Okay, now I hope you have heard about Tata Steel, Tata Salt, Tata Motors. Okay, this is a company, and Tata Group is a public limited company. Okay, it is a public limited company. Now I'll explain you later when we study the concepts of class 12, issue of shares and all, that what is a public company, what is a listed company. Okay, you will get to know that. It's very interesting, trust me, it's very interesting. Okay, now this is a company. Okay, now preliminary expenses is actually applicable only in case of company. Okay, in real world. Now see, what is a preliminary expenses? What do you mean by word pre? You know what's the meaning of pre and post? We all know the meaning of pre and post. Pre and post. Okay, now pre means before, post means after, right? I hope you know what is prepaid, recharge, right, and postpaid recharge. Okay, prepaid means before using the data of a telecom company or a SIM or any let's cut off this example. Okay, very bad example. Okay, now see, it's I don't think I need any example for this. Pre simply means before, and post simply means after. Okay, now say for example, in case of company, okay, there is one there are two partners. Okay, Mr. X and Mr. Y, they decided to start a company. Okay, they decided to start a company. Now I'm talking about preliminary expenses. Okay, they decided to start a company. Okay, say for example, XYZ limited company. Okay, XYZ limited company. Now they decided to start a company. Okay, now before starting a company, okay, now what they have to do? First, they have to do some research work on the idea. Okay, say for example, they have an idea of a product. Okay, now they cannot just launch the product. No, they have a fear that what if our product does not work in the market. Okay, now for this they have to do a research. Okay, a market research. Okay, now they will have to do surveys. Okay, they'll have to do surveys. Okay, now they'll have to take some advice of professionals, right? So they'll have to take some engineering advices. Okay, now they are a company. Now they'll have to they'll need legal expenses. They'll have some legal expenses to start a company. Okay, to make the documentation, to do the documentation works, right, to prepare legal documents and all. So this kind of expenses they will have to do it before even starting a company. Okay, this kind of expenses they will have to incur before starting a company. Okay, before starting a company. So what is this type of expenses called? Simple. This type of expenses is called preliminary expenses. Simple as that. Pre means before starting a company. Before starting a company, you will have to do some expenses that will be called as preliminary expenses. Okay, now see, now what happens? These are the expenses which are allowed by the law. What do I mean by allowed by the law? Okay, the Companies Act 2013 allows this kind of expenses to be debited in your P&L account. Okay, these are the expenses which you can debit in your P&L account, called as preliminary expenses. Okay, you can debit it in your P&L account. Now see, what is the problem? Okay, say for example, in first year the preliminary expenses are 1 lakh rupees. Say for example, 1 lakh rupees. Okay, to do all the research work, surveys, engineering advices, to take legal to do the legal work, they have incurred 1 lakh rupees. Now see, what does the government say? Okay, what does the Companies Act, what does the Income Tax Act says? That this 1 lakh rupees you will not debit the whole amount in the very first year. Okay, now say for example, let's do a timeline. This is 1st Jan. Okay, now X and Y, they have decided, they have a plan, okay, to start a business. Now they did the research work, they do all the legal compliances, and here on 1st April 2000, say for example 23, they have decided to start their business. Okay, they have decided to finally start their business, okay, to sell their product. Okay, now see, all the expenses which they have incurred during this period will be called as preliminary expenses. Okay, now this is the first, now this will be the first year of their incorporation. Okay, this will be the first year where they will start their business. Okay, now the income tax act says these expenses 1 lakh rupees, okay, you will not debit the whole amount in your P&L account in the very first day, in the very first year. Okay, you will not debit this 1 lakh rupees in the first year. Now what does the income tax say? What does the law says? That these expenses of rupees 1 lakh you will write off in a period of 5 years. In a period of 5 years. What do I mean by in a period of 5 years? This 1 lakh rupees total expenses you will have to divide by 5, which comes to 20,000. Okay, now this 20,000 you will have to debit this 20,000 to your P&L account in your first year. Okay, you have to debit this 20,000 in your P&L account in your first year. Okay, and again in the second year 20,000, again in the third year 20,000, again in the fourth year 20,000, again in the fifth year 20,000. Okay, now this way your 1 lakh rupees you will write off it in a period of 5 years. Okay, in a period of 5 years. Now when they bring these expenses to their when they bring these expenses to their P&L account, okay, to the books of accounts, this is a balance sheet. Okay, this is the balance sheet. Now this is your fixed assets, this is your current assets. Now here after the current assets you will have to bring it in your books of accounts as 1 lakh rupees as your preliminary expenses. See, this is not an exact type of expenses, right? But we have to do some treatment to this. We have to find out some treatment. So what does the law say? That you bring it as an asset in your P&L account. Okay, now once you bring this in your P&L account as an asset, you'll have to write off every year. Okay, now how will they write off? What will be the journal entry? Profit and loss account debit to what? Preliminary expenses, 20,000 each. I have told you why this 20,000. These expenses will be written off in a period of 5 years. Okay, so 20,000 each. I hope things are clear. Now see, P&L we have debit for all expenses and losses, and credit for assets. We have credited assets, which means we have reduced our assets. Now these preliminary expenses have been reduced by 20,000. Now when you prepare the balance sheet for your next financial year, what will be the value of the P&L? What will be the value of the preliminary expenses? Minus 20,000. Okay, 80,000. Now again in the next financial year you will have to write off 20,000. Okay, and in the third financial year you will write off 20,000, in next 20,000. This way in 5 years you will finish this. You will write off whole 1 lakh rupees in a period of 5 years. Now what do you mean by write off? Write off simply means to reduce the value or to finish the value from the books of accounts. Okay, so this is the concept of preliminary expenses. Okay, students used to be very confused. Okay, what is this preliminary expenses? It's written expenses, but we have been taking it in the books of accounts. Okay, similar with advertisement expenses and loss on issue of shares. Okay, these two things you will not see very much in your questions. Okay, but the logic is simple. If you see any expenses and if you see any losses in your balance sheet, that simply means this is a type of preliminary expenses. This is a type of preliminary expenses, fictitious assets, which we have to write off in a period of 5 years. Okay, I hope things are clear. Simple. Okay, now let's move further with what is tangible assets and what is intangible assets. Okay, tangible and intangible assets. Tangible and intangible assets. Okay, tangible and intangible assets. Okay, write the definition of tangible assets. Tangible assets. Okay, assets having physical existence which can be seen and touched are known as tangible. Simple. Tangible means which can be tangible, simply means assets which can be seen and are known as tangible assets. Okay, what is the example? Land and building, plant and machinery, furniture, stock, etc. See, don't be confused between tangible and fixed assets. Okay, don't be confused between tangible assets and fixed assets. Okay, see, don't be confused between tangible and fixed assets. Do you think fixed assets will include stock? No, fixed assets will not include stock, but tangible assets will include stock. Tangible assets simply means those assets which can be seen and touched. Okay, see, stock is a current asset, but we can see and touch this asset, right? We can see and touch this asset, so this will be tangible assets. Okay, so don't be confused. Let me write it again. I know many students used to be confused between tangible and fixed assets. Okay, don't be confused between fixed assets and tangible assets. Okay, don't be confused between fixed assets and tangible assets. Okay, now second part will be our intangible assets. Okay, this is tangible. Number 2 is intangible assets. Okay, write the definition. These are assets which are not normally purchased and sold in the open market. Okay, now intangible assets are those assets which cannot be seen and touched. Okay, so what is the example of intangible assets? Goodwill and patents. Okay, I will explain what is this patents in a very clear manner. Okay, we'll discuss what is this patents, but I will not talk about goodwill right now. Okay, there is a separate chapter in class 12 about goodwill. Okay, we'll discuss there in a very detailed manner. Okay, it's very important concept, and students used to be very scared of this concept. Okay, your main, if I say one of the toughest concept of goodwill as per students, one of the toughest concept in class 12 as per students is goodwill, but it's very simple. Okay, if you understand, it's very simple if you understand it logically. Okay, so this part, goodwill part, we will discuss later on. Okay, later on, in a sense, when if you happen to take tuitions from me, I will explain this concept of goodwill in very detailed manner. Okay, now let's move further with our definition of intangible assets. It does not mean that these assets are never purchased and sold. Okay, they may be purchased and sold in a special circumstances. Okay, so what is an intangible assets? These are assets which are not normally purchased and sold in open market. Intangible assets are those assets which cannot be seen and touched. Example is goodwill and patents. It does not mean that these assets are never purchased and sold. They may be purchased and sold in a special circumstances. Okay, now I hope you have heard of the concept patents. Okay, what do you mean by patent? Okay, patent, I hope you have heard of this. Patents, trademark, copyright. Okay, trademark, copyright. So these are all this is a type of intangible assets. These are all intangible assets. Okay, goodwill, etc. These are all type of intangible assets. Okay, now I will discuss patents. Okay, I'll discuss patents in detail, and trademark and copyright I will not discuss it right now because these are very easy. Trademark, let me just tell you in shortcut what do you mean by trademark. Okay, say for example you are starting a business. Say for example Reliance. Okay, say for example Tata. These are all big names. These are all big names, right? Now, if you want to start business with this trademark, if you want to start this business with the name Tata, you will not be able to start the business with the name Tata Company, because this is a trademark of Tata Company. This name has been trademarked by the Tata Group. Okay. Now, another example of trademark. Okay, this is the latest example. ICAI, the Institute of Chartered Accountants of India, and the Institute of Cost Accountants of India. This is Institute of Chartered Accountant, this is Institute of Cost Accountant. Okay, these two institutes, okay, ICAI and Cost Accountant, or Institute of Cost Accountant of India, they were having the same trademark. Okay, whenever someone asks me, where do you study, okay, what's the name of your institute, I simply say ICAI. I don't say the Institute of Chartered Accountants of India, it's very long, right? I simply say ICAI. Now, a student studying in Cost Accountant, Institute of Cost Accountant of India, he also used to say I studied in ICAI. So there used to be very confusion, okay, and it's not good for the institute, for both the institute. Now, the Institute of Chartered Accountants of India, they file a case. They file a case in Delhi High Court. Okay, that this trademark, this ICAI, the trademark belongs to us, but it has been used by the Institute of Cost Accountants of India also. Okay, now trademark, this name, the ICAI started the institution before cost accountants of this institute started their institute. Okay, now the case went in favor of Chartered Accountants of India, the Institute of Chartered Accountants of India, and it has been ordered to the Cost Accountant, Institute of Cost Accountant of India, that you remove the name, the trademark ICAI from all places where you have used. Okay, now the Institute of Cost Accountant of India will not be able to use the trademark ICAI. So this simply is the example of trademark. Okay, now what is copyright? Copyright simply means, say for example, you are a music director, you are a music composer, or you have written any books, or you have written any lyrics of a song, or you have sang a song. Okay, now you can copyright the lyrics, you can copyright the book. Okay, this is mainly used by the authors. Okay, when they write a book, okay, they will copyright this. You will see there will be a symbol as C, this. Okay, C and circle. So this simply means copyright. Now, without your permission, no one will be able to publish your book. Okay, even if you give them publishing right, they will give you royalty. They'll have to pay you royalty. Okay, this is a simple example of copyright. Now let's understand patents. Okay, what do you mean by patents? See, if you learn from me, okay, you will get in-depth knowledge. Okay, and teachers simply, I used to be so worried about the education system, frankly speaking. Okay, teachers, they never, when I was in class 12, okay, I don't want to say any bad thing about my teachers. Okay, they were very good. Okay, they were very good, but what I believe is, being a teacher, it is your responsibility to teach small things, little things. Okay, now education, it's very interesting, especially if I don't know about other subjects. Accountancy is such an interesting subject, very interesting subject. It's very related to real world. It's related 100% related to real life. Okay, so whatever you learn, whatever the concepts you are learning, that concept will be applied in real world only. Okay, they will be applied in real world only. So you should know what is trademark, what is patent, what is copyright, right? It's very interesting if we relate it with real life examples, and if we learn, right? So this will be one benefit which you will get if you take tuitions from me. Okay, I will not only be concerned about the topics, the syllabus which is covered in your books. Okay, I'll be concerned about those topics which are not covered in your books. Okay, I'll also cover those type of topic, because it's very important. When you will be in class 11 and 12, your teachers will say this you will learn in your college days. When you go to college, your professor will say you have already learned in 11, 12. Okay, so you'll be stuck between these two things. Okay, so it may take time to, say for example, you are learning a lecture, other teachers will teach it in 30 minutes. Okay, I will teach it in 50 minutes, but I will make sure that you get the exact knowledge, the concise, the brief knowledge which is required. Okay, so this is the benefit of learning in depth. Okay, having the in-depth knowledge. It's very interesting. Accountancy is very interesting. Okay, don't take this subject as a very difficult subject, or a very hard subject. This is not a hard subject at all. It's very easy if you have the conceptual clarity and if you can understand things. Okay, so let's start with patents. Okay, now what is a patent? Let's write the definition. The official right, to be the only owner, okay, only owner to make, use, or sell a product or an invention. Okay, the official right to be the only owner to make, use, or sell a product or an invention. Okay, now a patent for an invention, okay, very important word. A patent for an invention is granted by the government to the inventor. INVENTOR is granted to the inventor by the government. Okay, giving the inventor the right to stop, very important word, right to stop others to make giving the inventor the right to stop for a limited period to stop others for a limited period from making or using or selling the invention without the permission of the inventor. Okay, now see, what is a patent? The official right to be the only owner to make, use, or sell a product or an invention. Okay, a patent is an invention. A patent for an invention is granted by whom? By the government. To whom? To the inventor, giving the inventor the right to stop others for a limited period, okay, from making or using or selling the invention without the permission of the inventor. Okay, I'll explain in detail. Now, the idea behind a patent is that if a person develops a new technology, manufacturing process, or or device, he can patent it and prevent others from copying his invention. Okay, now let's understand this. There is a act in India called the Patents Act 1970. The Patents Act 1970. Okay, say for example, you are a inventor. Okay, you have invented any technology, you have developed any new technology, okay, you have developed new manufacturing processes or a device. Okay, it should be a fresh invention. Okay, it should be a very new invention. Such kind of invention should not be there in the existing market. Okay, in space, if I talk about India, such kind of invention should not be in India. Okay, if you have invented any devices or any new technology or any new manufacturing processes, okay, and you are the inventor, that is your idea and you have invented the product, okay, you can go to the government and file a patent under the Patent Act 1970. Okay, and you will be granted a patent. Okay, you will be granted a patent which will say, it will be a legal document which will say that Mr. X is the sole beneficiary of the invention and no other will be allowed to use the product or technology or manufacturing process without the permission of Mr. X. This will be a legal document. Okay, this is not the exact word. This is not the exact word. I have just written it to make you understand. Okay, it will be an official document. If possible, in near future, I will show you how a real patent, how a real registered patent look like. Okay, now what was the idea behind? The idea behind a patent is that if a person develops a new technology, manufacturing process or device, he can patent it and prevent others from copying his invention. Simple. This is what patents is called. Okay, so this is a type of intangible asset. This is an intangible asset. Okay, this is an intangible asset. Now you may have a question. Okay, you may have a question. You may say can we patent only products or new invention? This may be a question, right? No. Okay, no. We can patent the design. We can patent the design, utility also. We can design the design. We can patent the design and utility. So, for example, you have designed a new technology, okay, and you don't want anyone to copy your idea of your design. Okay, so you can go and patent this design, so no one will be able to copy this design. If they happen to copy your product or your new invention, you can sue them in court. You can go to the court. Okay, and utility, what do you mean by utility? How to use it. Okay, how to particularly use this type of design or this type of product, so you can patent that also. Now there may be another question: can we patent idea? Let me take you a simple real life example. Okay, can we patent any idea or business idea? Can we patent this? This is a question to you. Okay, can we patent any idea? Can we patent any idea? Right, this is a recent example. Okay, I had a very good idea, okay, of business in the state of Mizoram. Okay, I had a very good idea. I made a detailed plan and I made a detailed blueprint of how I will do this, how I will run my business and all. Okay, so I went to the official website of the Patents Act 1970. Okay, now when I went there, when I read the rules, when I read the regulations, okay, when I read the act carefully, I found out that the law does not allow anyone to patent the idea, simply because idea, anyone can have the idea, anyone can have a business idea. Okay, so what can we know from this? That idea has no value. Idea has no value. Only execution has real value. No matter how great your idea may be, if you don't execute it, it does not have any value. Okay, so idea cannot be, one key thing which you have learned from here is idea cannot be invented. Okay, if anyone patented, if any one of your friends says that I have a very good business idea, I will patent it, I will start after 2 years. No, that's not allowed. Okay, I patent, no, idea has no value. Okay, so now the next concept we will cover is depreciation. Okay, depreciation in the value of assets. Depreciation in the value of assets. Okay, now let's write the definition. The assets acquired in the business are continuously used, right? They will naturally be losing their utility, value and usefulness. In other words, there will be wear and tear. Okay, now what is depreciation? Loss in the value of assets due to its constant use is termed as depreciation. Simple. Okay, now let's take a real life example. Okay, say for example you have a mobile phone. Right? You have a mobile phone. Everyone has mobile phone right now. Okay, wait, you have a mobile phone. Say for example this phone you have purchased it on 2000 Feb or March. Okay, March 2022. Okay, now we are in March 2023. Say for example you have purchased this on for 20,000 rupees. Okay, for 20,000 rupees. Now this phone has been continuously used by you for 1 year. Okay, now suppose you go to market. Okay, you go to any market and you want to sell your mobile phone, you want to sell your phone. Do you think you will be given 20,000 for this phone? No, simply because this is an old phone. The technology, obviously, right, in electronics technology changes rapidly, so in 1 year new technology will be there, right? In 20,000 you will get a better phone than the one you are using right now, right? So if you happen to sell this phone in the market, will you be able to fetch 20,000 rupees for this phone? No. Simple, the straight answer is no, because this phone has been continuously used for 1 year. Okay, the value will be what? There will be a wear and tear. Okay, loss in the value of assets due to constant use. Okay, so this is termed as depreciation. Simple as that. Now let's move further with the concept. Okay, point number 1. It is necessary that loss due to depreciation, very important, okay, very important, must be accounted for. It is necessary that loss due to depreciation must be accounted for. Point number 2. Depreciation on assets will affect profit of the business. It will reduce profit, so it should be debited to profit and loss account. Simple. Third point. Depreciation will also reduce the value of assets, right? Depreciation will also reduce the value of assets, so the amount of assets appearing in the balance sheet must be shown after deducting amount of depreciation. Okay, amount of depreciation. Let's try to understand this with an example. Okay, I hope it's very clear, right? Depreciation is very clear to you, but at last I will tell you one logic. Okay, why do we debit? I will ask you a simple question: why do we debit depreciation in profit and loss account? Okay, I don't think you'll be able to answer. Okay, it's not that I'm showing it off, but just wait for the last moment. Okay, it'll be very interesting. Now let's take an example. Okay, example: furniture worth. This all this definition all I have taken it from the class 11 book. Okay, this is not my own words, I have taken it from class 11 book. Now furniture worth rupees 10,000, and some from internet, which is not available, which is the definition which I think it's not worth explaining. I have taken that from Google and some from my own books. Okay, now furniture worth rupees 10,000 was purchased on January 1st 2011. Okay, it was used during the year 2011. Now see, its utility and value will not be same in 2012. Okay, so see, you have purchased a furniture on 1st Jan 2011. You have used this furniture for the whole year, 31st December 2011. You have used this furniture for whole year, right? You have purchased it for 10,000. Now you have used this furniture for the whole year, right? Now do you think if you happen to sell this furniture in the year end, you will get 10,000 rupees? No one will pay you 10,000, right? There will be a wear and tear, decrease in the value of assets, okay, due to its continuous use, right? So now when you come to next year, 2012, okay, 1st Jan, the 10,000, will it be valued 10,000 now also in 2012? No, right? There will be decrease in value. So this simple thing is called as depreciation. Okay, this simple thing is called as depreciation. Now furniture was 10,000. Let's say the depreciation rate is 10% on WDV. Okay, now what will be the amount of depreciation? 10,000 into 10% will be 1,000. Now see, okay, the important part, the interesting part. Now this 1,000 is a loss for you. Because decrease in the value of assets by 1,000 rupees. Okay, during the year 2011. Now what will be the accounting treatment, or if I say what will be the journal entry you will pass for this? See, depreciation is a loss. Debit all expenses and losses. So depreciation account debit, journal entry, depreciation account debit to what? Furniture account 1,000. 1,000. Furniture account debit, depreciation account debit to furniture account 1,000 rupees, right? See, depreciation is a loss, it has been debited. And furniture, there is a decrease in the value of assets. Right? Whenever there is decrease in the value of assets, we will always credit. There is a rule. Okay, now again I will say journal entry in depth. I will cover it in the next lecture or in the next session. Okay, I will for sure cover journal entry. Okay, now this is the journal entry which you will pass, and the second entry which you will pass is profit and loss account debit to depreciation 1,000. We know that nominal account. Okay, we know that depreciation is an item of depreciation account. Depreciation is an item of nominal nature. Okay, so this depreciation will be transferred to some real account, will be transferred to one account which is called as profit and loss account, and depreciation has been credited. See, debit, credit, depreciation account is closed. Now when you prepare your P&L account, you will, this is your debit side, debit all expenses and losses. You will debit your depreciation, right? Because of this depreciation, your profit has reduced to net profit. So for example, there was no depreciation. Okay, your profit would have been much higher than what it would be after debiting depreciation, right? Now same in balance sheet. What will be the position in balance sheet? This is your fixed assets. Furniture is an item of fixed assets. 10,000 was the value. Now less depreciation 1,000. So the value will be reduced by 1,000. So the net value at the year end will be 9,000. Simple. Now important question, which I said that I'll ask you one important question at the last. Okay, now why do we debit depreciation in our profit and loss account? Can you give me the answer? You may say, yes sir, simply because it's an expense. No, it's not an expense, it's a loss, right? It's a loss because decrease in the value of assets is a loss for us. But what is the reason behind transferring depreciation to P&L account? What is the reason behind that? Can you give me the answer? See, here you will debit salaries paid, you will debit rent paid, you will debit to other, say for example there is office expenses. Now this kind of expenses is cash transaction, cash expenses. You have paid cash for this, you have paid cash for this, right? This is your real expenses, this is your real expense. So what is this depreciation? Depreciation is a non-cash expenses, non-cash expense, right? What do I mean by non-cash? See, you have not paid any amount for this depreciation, for this expense or for this loss, right? You have paid 10,000 when you buy the furniture at the year and at the beginning of the year. Now you have not paid anything, right? So this kind of depreciation will be called your non-cash expenses, non-cash transactions. Okay, now what is the reason behind, logical reason behind debiting depreciation in our P&L account? Let me tell you. Okay, very interesting. Okay, see, say for example you have purchased furniture, in the year 2010. Now this furniture you will be able to use for 10 years. Say for example 2011, 2012, 2013, 2014, 15 and so on. Okay, now you purchase this furniture for 10,000 rupees. 10,000 rupees. Now what is the logical reason behind debiting depreciation in our P&L account? See, each year if you debit, let's take straight line method. Okay, let's take straight line method for 10 years, no residual value. Okay, no residual value will be nil. Residual value means the value which we will get after selling the furniture after 10 years. Okay, now what will be the depreciation for each year? 1,000. Now see, when you prepare a P&L account every year for 10 years, you will debit this depreciation every year, 1,000. To depreciation 1,000, year 1, year 2, year 3, year 4, right? You will debit this depreciation for 10 years with 1,000 rupees each, right? Now your net profit, because of this depreciation which we have charged, your net profit has reduced. Say for example, if there was no depreciation, okay, your net profit would have been higher by 1,000 rupees each year, right? So what is the amount which you have kept aside? What is the amount of net profit which you have kept aside from the profit and loss account? What is the amount? Rupees 1,000 each for 10 years, which makes 10,000. So what is the meaning of this? See, you have purchased the machinery on 2010 for 10,000 rupees. Now after with debiting 1,000 rupees each every year for 10 years, okay, by the year end of 10, by the year you use this furniture for 10 years, okay, after 10 years you will have 10,000 rupees in your depreciation account. You will have 10,000 rupees in your account, separate 10,000 rupees to purchase this furniture again. Simple. So this is the reason why we debit depreciation in our P&L account. Okay, so that we will, even after 10 years, we will be able to purchase the furniture, so that our business will not stop. Okay, this is the concept with all the plant and machinery, all the fixed assets. Okay, this is the reason why we charge depreciation to our account. Okay, to P&L account. These are non-cash expenses, right? So what is the logic behind charging depreciation? So that after 10 years you have kept aside 10,000 from your profit to purchase a furniture again after it becomes obsolete, or after you have to sell it off or scrap it off. Okay, so this is the real reason behind we charge depreciation to P&L account, to removing P&L account from the charging depreciation to our P&L account. So this, my dear students, this type of knowledge, let me be frank, okay, I am so jealous of you, okay, if you are watching this video, that this kind of knowledge you are getting it in the very beginning, very inception of your career. I'm jealous of you, because see, there was no one to teach us knowledge in depth in this way. Okay, I got to know this knowledge after I joined CA. Why we charge depreciation? We simply know that depreciation is a loss we book to P&L account and you reduce the P&L account. But in-depth analysis, okay, no one gave us this kind of in-depth analysis. Simply because we were in class 11, we said that you will get to know this in class when you go for higher studies. But no one, teachers don't teach me this. Okay, it was that I had that kind of knowledge, and I tried to decide. I decided that why this depreciation is a non-cash expenses, right? Then why it is allowed to be debited in our P&L account, right? Because of this, our profit has been reduced, right? And the government will get tax on this only, no? The government will get tax on this only. The government will get tax on this profit, net profit. This is called as profit before tax. Okay, I had a question that why depreciation has been allowed to be debited in P&L account. I used to go for audit. Okay, I used to go for audit, and whatever transactions in a day they have done for 10,000 rupees, we used to disallow it. Okay, say for example, if they have debited 10,000, more than 10,000 in a day, what we will do, we will disallow. That means we will add it back. So when we add back the expenses, that profit will be more. Okay, and they'll have to pay more taxes to the government. Now, I had a question that depreciation is a non-cash expense. Why it has been allowed to be debited to P&L account? Then when I go for further research, then I came to know this is the real reason why depreciation has been charged to P&L account. Okay, it has been allowed to charge to P&L account. So this is all about depreciation. Okay, now when we solve questions, okay, we will solve real questions. Okay, then you will get the in-depth analysis, you will get the complete knowledge of depreciation. This is just a concept clarity session. Okay, so similarly there is appreciation. There is a similar concept called appreciation. Okay, appreciation of assets, appreciation in the value of assets. I hope you guys are enjoying the session. If you're watching this interestingly, I hope you're enjoying the session. See, I'm trying to this is the first, let me be frank, after 4 years this is the first time I'm teaching. Okay, I have planned to teach because staying in home, I'm preparing for my CA. I'll be needing more 2 to 3 years to complete, frankly speaking. Okay, I had some personal issues, but what I thought of is, if I can teach 2 hours a day, right, I will also be my knowledge will also increase, and I will even be able to earn some money. So this is the reason why I have decided to teach. So if there is any mistake, okay, I hope you will forgive me for that. Okay, so but let me trust me, students, trust me, my dear friends. If you come and if you take tuitions from me, I will make sure that you get that knowledge. Okay, and I may guide you in. There will be times when you don't want to study, right? I was the 7th rank holder in 2016, right? I will guide you how I have achieved that, right? I have achieved at least something more than you, right? Then I'll be able to guide you. Okay, other teachers you simply go and you will teach, you will learn, and you will come back home. But with me, you will have some sense of mentorship. I'll give you some. I'll be your mentor, I'll be your brother. Okay, so it will be very enjoying journey. We'll enjoy a lot learning together. Okay, so now let's move with our next concept of appreciation in the value of assets. Now, what is this appreciation? It is just possible that value of certain assets, such as land and building, may increase. Okay, the increase in the value is gain. The increase in the value of assets is a gain. So it will be credited. Okay, this will also increase the value of assets. Okay, so what will be the journal entry? Assets, the value of assets. Appreciation simply means the increase in the value of assets. Okay, there will be times when you come to class 12, you will see partnership firm. Okay, you will admission of partner, you will learn about admission of partner. You will learn about admission of a partner, retirement, death of a partner. So in this kind of situations, okay, there will be restructuring of balance sheet, restructuring of balance sheet. Okay, restructuring of balance sheet. So whenever there's restructuring of balance sheet, what will the partners decide? The business owners will decide that let's just let's find out the real value of our assets. Let's try to find out the real value of our assets. Let's hire a registered valuer. Okay, a registered valuer is a person who will find out the real value of your assets. Okay, we will find out the real value of your assets. Say for example, here you are trying to restructure your financial statements, so you'll hire a registered valuer. He will value your assets. Okay, you will value your assets as per current market value. Okay, and if if there is the conclusion is that your current value of the asset as per your books is 10,000 rupees, but the registered value as per his valuation, the value of the real value, the market value, the real value of the asset is 12,000 on today's date. Okay, so there will be revaluation of assets. Okay, so this will be a gain for you. So what will be the journal entry? The asset is being increased, the value of assets is increasing, right? So how will we generalize this? Say for example, land and building. Okay, so the journal entry will be land and building account debit to revaluation reserve account. Okay, this will be the journal entry. 2000 was the amount of revaluation, 2000. Okay, so this will be the journal entry. This will be the journal entry. So I will explain in detail later on in tuitions this revaluation reserve. Okay, this is a kind of reserve, this is a kind of profit. Okay, but this is not real profit. Okay, this is not the profit which we have earned from the day-to-day business activity. Okay, so this is all about appreciation in the value of assets. Appreciation simply means increase in the value of assets. Okay, you just have to remember this as of now. So I hope you are enjoying the session. So the next topic which we will cover is liabilities. Okay, I will be covering that in next video.